Speculation is rife that the government may announce a national emergency, which could include the suspension of parliament. Prime Minister Tan Sri Muhyiddin Yassin chaired a special meeting with the cabinet today and at nearly 5 p.m. was seen arriving at Istana Abdul Aziz in Kuantan for an audience with the Yang di-Pertuan Agong Al-Sultan Abdullah Riayatuddin Al-Mustafa Billah Shah. He is said to have met with the king to be conferred with special emergency powers, though it is unclear what these emergency powers will actually entail. Lawyer Datuk Jahaberdin Muhammad Yunus told the edgemarkets.com that if an emergency is indeed announced by the government, it should not be a national security type with curfews, strong military presence and the like, but rather an economic, political and health emergency. He added that the king must take cognizance of the political instability, which ought to be addressed if the government proposes the emergency, lest it is used as a political tool. This would not help, he said, as the focus needs to be on restoring health, economy and political stability. Under the federal constitution, the king may declare an emergency if he is satisfied that security, economic life or public order is under threat. Should an emergency be declared, the power will be centred on the PM and members of the National Security Council. The temporary measures for reducing the impact of coronavirus diseases 2019 COVID-19 Act will be gazetted tomorrow and come into force immediately. Minister in the Prime Minister's Department, Datuk Taqiyuddin Hassan, says the relevant bill was passed in the Dewan Rakyat on August 25th and in the Dewan Negara on September 22nd. He says the Act, which will be enforced for 2 years, will provide benefits to individuals and companies that are economically affected as a result of the COVID-19 pandemic. It is aimed at reducing the impact of the outbreak among the people, enabling them to seek justice via arbitration. He explains that disputing parties can resolve matters without involving a court hearing through the COVID-19 Mediation Centre, which is established under the Prime Minister's Department. The arbitration carried out through the centre is open to all, with the disputed sum limited to 300,000 ringgit and below. The government will finance the cost of the arbitration for the B40 and M40 groups and micro and small industries. Goldman Sachs Group has admitted its role in the 1MDB scandal. Under a settlement with the US DOJ, it will pay $2.9 billion. The sum includes about $600 million of disgorgement. Under the deal, the US Investment Bank and its Malaysian subsidiary admitted to conspiring to pay over $1.6 billion in bribes to obtain lucrative underwriting and other business relating to 1MDB. It also acknowledged that it had failed to address red flags and said it viewed the issue as an institutional failure. The bank's parent company managed to avoid conviction, though its Malaysian division pleaded guilty in a US court to 1 count of conspiracy to violate anti-bribery laws. In all, Goldman is paying some $5 billion in fines to regulators in countries including the US, the UK and Singapore. The bank will also cut the pay of current executives, including CEO David Solomon, and claw back compensation from its predecessor Lloyd Blankfein, as well as its ex-bankers including Tim Leisner and Roger Ng. Goldman earned $600 million after it helped raise $6.5 billion in bond offerings for 1MDB. 3 months ago, it reached a settlement with Putrajaya after agreeing to a $2.5 billion cash payout and giving its guarantee to return at least $1.4 billion in proceeds from assets linked to the Strategic Development Fund. Maxis says third quarter net profit rose 1.9% to 365 million ringgit on lower depreciation, even as revenue dipped due to the MCO. Quarterly top line shrank 3.2% to 2.21 billion ringgit. Maxis declared a third interim dividend of 4 cents per share. In a statement, the telco said its mobile business remains resilient, leading the market with positive uptake for its Hotlink Prepaid Unlimited and Maxis One plans. It posted a stable underlying service revenue, excluding wholesale, at 1.93 million ringgit, driven by growth in core mobile business and fiber segment. Meanwhile, it continued to see the surge in data consumption due to the impact of COVID-19 and work-from-home practices, as well as the extended redemption period of free 1 GB per day productivity internet offering. While it maintains its decision not to provide financial guidance for the year, Maxis said it remains in a good financial position to weather the crisis created by the outbreak. Homegrown fashion retailer Padini Holdings expects the economic outlook to be tough until 2022. In its 2020 annual report, its chairman Chia Sui-yuan noted that even prior to the emergence of the coronavirus, the global economic tumult, trade war, currency volatility, and stronger regional competition were already making it tough for businesses to operate. He noted that all of Padini's outlets were closed during the MCO from mid-March to mid-May, while footfall was still low during the subsequent RMCO as fewer people visited malls. Padini is now focusing more on developing its digital retailing and remains on the lookout for opportunities to grow its market presence abroad, especially in ASEAN. He added that the group is cautiously optimistic about navigating through the current crisis and delivering long-term value to its shareholders. Padini slipped into the red in the fourth quarter with a net loss of 16.84 million ringgit as revenue halved to 174.2 million ringgit. This is the first time it registered a loss-making quarter since 2004.